Hi, thanks for watching this LCG snapshot. I'm Jasper. We had an unfortunate event again, another terrorist attack in London. You know, that can sometimes lead to demand for havens, but unfortunately we've seen just quite a lot of them recently. And what we're going to talk about today is actually a haven asset, the yen, heading in the opposite direction. We're actually seeing the dollar strengthen against the yen. It's not at all related to what's happened in London. It's purely what's been happening with the Federal Reserve. Obviously, they lifted interest rates, and the Bank of Japan is still holding back from tapering back their QE program. Now, we had some import-export data from Japan this morning. They went into surprise trade deficit, and so that's obviously negative for Japan. The yen is headed lower. And we want to look at the chart now for dollar yen, because there are signs here that potentially this kind of downward track that we've seen in dollar yen for the past couple of months and maybe about to end. We may have seen the lows around 109, so I'm going to have a look at that now. As I mentioned, here's the key 109 level. Now we're on a weekly candlestick chart for dollar yen. So the backdrop to this is that we came on a sharp slide down over a few months down to the 100 mark. Obviously we dipped a bit below it, but really that's the important number in the sand. We skyrocketed 1,800 pips up to 1,800. We've pulled back, but you know, it's been a kind of a meandering downtrend. And now what we're seeing is that potentially this 50-week moving average has provided support a couple of times here around the 109 mark. And if we zoom in a bit on the chart, you know, we can see more clearly these two hammer patterns, a sort of doji hammer, and then a more bullish hammer last week. This is potentially setting us up for a stronger up move in the market. We're at a confluence of support. It's this previous low. We never quite dropped down to it. So in fact, we've made a higher low here. 109 is the round number, and the 50-week moving average, as well as the 50% retracement of this move from below 100 up to above 118. So that 50% pullback of this sharp move looks like it might be support. And then we're going to drop down to the daily chart and see that we had a strong surge higher, made a new high out of this small range that we're in here. So the breakout hasn't sustained itself too well. We pulled back to the line, but as you can see, including the Sunday candlestick, which you can't put too much emphasis on, we're holding above this mark at the moment. You could say 110.50 is the sort of nearest round number, but it's 110.80 is the kind of clear line in the sand at the moment. And if we continue to push up above these highs, especially up above 111, it looks like potentially this longer term support may be holding, and we could be looking at the end of this downtrend and a push up towards the highs, and potentially up above 114 again, up above these highs, and perhaps if we pull back to this weekly chart, perhaps moving back up towards 118 again. Well, thanks again for watching this snapshot video. In the very short term, we've had some weak Japanese data that's sending the yen lower, but the bigger picture here is that potentially the yen is heading a lot lower just because the Federal Reserve is hiking interest rates. The Bank of Japan are not showing any signs of letting go on their very loose policy yet. And there doesn't seem to be the demand for haven assets at the moment. We're also seeing gold heading lower. So a few reasons to suggest the yen could head lower too. Thanks again for watching. If you do like these videos, then please subscribe to LCG and follow LCG on social media.